Good day. Today we are going to focus on the term income receiving advance, or what is called the deferred income. Sometimes it can be called the prepaid income. Okay, so what is this? Income receiving advance. So this means that the business has received an income of the next financial year. Okay, so this means that the business has received the income of the next financial year, meaning that, let's say for example, we're in year 2021. So this is the year that we are in right now. And then the business received a rent income, or let's just say that the business received, okay, the business received a rent income. So, but then it can be any income, okay? The business received an income in year 2021, but then this income is for year 2022. Okay, the business receives an income in year 2021, but then this income is for year 2022. Okay, so what will need to happen is the business will need to go and decrease the income account. Why? Because there will be an income that is not belonging in the current financial year. Remember, the reason we are doing this, it is because of the matching gap principle. Matching, which is saying that incomes should be recorded in a year that they belong in. Okay, so meaning that once we have received an income that is not for this financial year, we must subtract it from the income account because it's not belonging into this financial year. But then if we subtract it, where do we record it? So we record it in a new account which is called an income received in advance, which is a liability account. So this is a new term in grade 10. So we record it where in an account that is called an income receiving advance. This is a new term. So we use this. To record all the income that we received, but it's for the next financial year. Okay, so we use this account. This is called the income receiving advance. Okay, now let's go and do an example. On 28 February 2011, so the year end here, meaning that this year started on 1 March 2010, I mean, and then ends on 28 February 2011. Remember, your year must be a full 12 months, okay? The accumulated period in the general ledger of MN traders of the rent income totaled to 65,000. So this means that the business has received a rent income totaling to 65,000. Wow, this is good for the business. The business has received a rent of 65,000. So an income, so it's an income, so we must record it on the credit side. Remember, the income increases on the credit side. So it's GJ. So this is a total. It's not GJ here because this is a total. We must write balance brought forward. Now remember this. For the incomes and expenses, we write balance brought forward. Okay. So this is 28 February 2011. Okay. So this is the total income of the rent that you have received in this financial year that ends on 28 February 2011. But then they are saying that rent was received for 18 months. Now remember this, our year starts on 1 March 2010, and then ends on 28 February 2011. This is 12 months, right? But then we are told that you have received a rent of the 13 months. So this means that you have received a rent of the next financial year. Okay, remember our year is a full 12 months. So once we have received a rent of 13 months, it means that there's an income that is in advance. We have received an income of the next financial year. So what does this mean? This means that in this 65,000, there is a rent that does not belong in this financial year. So what do? We must come and decrease the rent. But then first thing first, we need to check that per month the rent is how much. Okay, so therefore we have to divide by 13 because we are told that the rent is for 13 months. So 65,000 divided by 13, it is 5,000. So meaning that 1 month is 5,000, every month is 1,000. I mean every month is 5,000. So we must come and decrease the rent with an amount of 5,000 because we are told that we received the rent for 13 months, meaning that only 1 month is in advance. So that is GJ. So now, where do we transfer this? So 28 February 2011, we transfer this to the new account that is called income received in advance, okay, which is a liability account. Income received in advance, okay, increase on the credit and decrease on the debit side. So we know that if something is debited, it must also be credited. Besides that, the liability account income received in advance is increasing. Remember, under income received in advance, we record all the incomes that the business has received, which is for the next financial year. Okay, so this is coming from the rent income. Okay, so 28 February 2011. Okay, so but then let's go and show this in the accounting equation. Liability, owner's equity, asset, amount, and then we have account credited, account debited. So which account is debited? The account that is debited here is the rent income. It is debited with 5,000 rand. So rent income, and then account credited is the liability account. Liability account here is credited with 5,000. So we have income received in advance, or sometimes it can be called the deferred income. How much is it? 5,000 rand. Okay, so there is no asset here, so it's 0. Now the rent income, it's an income, and the incomes, they increases the owner's equity. But then this rent income right now is debited, meaning that it's negative right now. So negative and positive, that is going to be negative, right? And then account credited is the income received in advance, which is a liability. And the liabilities, they increase on the credit side. So meaning that we must come and put a plus sign under liabilities.